Bharat onto stage. Bharat, can you hear me?
I can hear you. How are you?
Wonderful. I'm very well, thank you. I'm just going to hang around until you get your screen share up. And then once you're up and running, I will drop off and let you continue on.
Thank you ever so much, Akhil, and thank you. I really enjoyed the previous speaker. API Days is one of the best conferences on this circuit. It's such an important topic to discuss with our community and also with our clients as well. So thank you again for having me. So I'm just going to share my screen, and the typical model, my Mac just stopped responding. So can you just tell me if you can see my screen?
I can. It says Open Banking, the foundation for the new world.
Fantastic. Thank you, and
good luck. Yeah.
Thank you. So good afternoon, everybody, and I hope you had a good couple of days at this event. As I said, it's a real pleasure to come back to speak at API Days. I've never done that for Singapore. I would have liked to be there in person, but we know the situation around the world, and I hope you guys are all doing okay. So I'm going to just talk about what is it that we are seeing in the industry. Open banking, I know things are still evolving in a lot of countries. In some countries, like Singapore, for example, it's very much market-driven as opposed to regulatory-driven. At least in Europe, as PSD2 first came about, Payment Services Directive 2, that went live in January 2018. But the whole kind of regulation had been in the mix of creation since November 2015. So it's been a long time since people here have been talking about open banking and trying to implement it. And frankly, a lot of our clients thought of open banking as a regulatory burden that they had to do something they had to do, as opposed to something that would create opportunity. So the purpose of my talk today is to show how some of those clients have kind of changed gears, where they've come from compliance side to now on the compete side, and what kind of value-added use cases that we are seeing, and how it's affected the kind of the reference architecture and operating model. So I'm a techie, so please feel free to ask any questions, but I've tried to kind of make it a mixture of business as well as technical talk. So big forces kind of changing the industry at the moment, from the fact that the income from net interest margins that banks traditionally make has been compressed ever so significantly than ever before, but particularly in Western Europe and North America, the interest rates are practically down to zero. And in some European countries, it's a negative interest rate. This is something that we've never ever heard of in the Southeast Asia region. But here, if you put 100 euros in your bank, the next day it is not 100 euros, and it's slightly less. So there's a big issue around how banks have previously made money through the differences in margin, and that traditional income isn't there anymore, or at least not at the same level as it was before COVID-19, or even since the 2007-2008 crisis. At the same time, they do need to continue to do more to attract new generation of customers. Think about how banks traditionally had to open your bank account, or more complex products such as mortgages. You had to go into a branch with tons of paper. And now the expectation, through the fact that I can use a fintech, I can use other digital platforms, and that expectation is set in every walk of my life. And so therefore there's an expectation that, look, I should be able to just upload my document, or you should be able to use open banking and open data and open finance, these mechanisms to trust my identity and trust the data that my other suppliers will share with you. And so there's a change for each one. Behind each one of these boxes, I've got tons of other information. If anyone of you are interested, please reach out via LinkedIn or email, and I can share more content with you. And at the same time, whilst all that is happening, banks are trying really hard to have that sticky relationship with the existing customers and attract the new generation of customers. They're also getting bombarded from fintechs, from the challenger banks and fintechs, effectively challenging some of their business models as well. Think about the money transfer services or some of the niche services that bank used to make a lot of money on. And now they can't, because people are going to the likes of Revolut for peer-to-peer transfer or TransferWise, or using challenger banks, because their rates are the intraday wholesale market rates, so very, very competitive. And at the same time, there's tons of more regulation for them to comply with, and ever so increased cybersecurity risks as well. Particularly over the last 4 or 5 months, many of our clients have seen 10 to 20 times fold increase in the number of cyber attacks they're seeing from bad actors, and it is to that point, it is getting increasingly difficult for financial institutions to distinguish between good actors and bad actors, and when it comes to cybersecurity. So it's an extremely difficult place to be at the moment. But if I look at the kind of the work that I have done and my colleagues are doing right now, in these 5, put them in these 5 buckets. There's the financial institutions are looking to enhance the core products. So how do I make my product more compelling in the way that it is attractive to my clients? I can start to build new revenue streams. I don't rely on the older ones, because those old revenue streams are drying up. And how do I be excellent at operating the bank? As many of you perhaps who have come from a bank, you recognize that 90-95% of the bank is focused purely on running the bank through whatever means necessary. Keep the lights on, keep the branches running, and serve the customers. And only 5% is focused on changing the bank, in the sense that let's do innovation projects and do transformational projects that fundamentally change the bank. Because there's only, despite all of the kind of cost pressures and income pressures, there's only so much that a bank can do to cut their costs. But there's a minimum amount of mass that is needed to operate the bank. And there are some really good examples when you look at the structure of a financial institution. The cost of acquiring and onboarding and serving a customer relative to a digital platform are much, much higher. Typically, to onboard a customer for a complex product, or even kind of a semi-complex product like a SME bank account, typically would be 150 to 200 pounds. Whereas a digital startup could do the same thing for less than £5. So there's a big difference in how the traditional banks operate and how some of the newer challenger banks are operating. And so the incumbents are very much focused on how do I drive straight-through processing, digital and process automation. And as we all know, that drives the API economy, and effectively creating a set of APIs and modernizing the core system, so you can create a set of microservices that can help you regrow that customer journey at a very, very fast pace. To then, on the far right, I think new ways of working with the advent of adoption of cloud, particularly. I would say all of our clients are in the hybrid cloud model at the moment, where there's obviously on-prem and their own data centers. But over the 5 to 7 years, we expect them to exit their own data centers and move 90 or more % of their workload to public cloud, and co-locate some of their infrastructure in our data center, so that they can have that data residency and security and resiliency as a part of this as well. And obviously, I think the cybersecurity and control remains a key focus, and if anything, it is now definitely a board level discussion. It is no longer that security is an afterthought and people worry about it after something's happened. There's definitely a focus right from the beginning. Now, all industries are going through the likes of open banking. It isn't just the banking ecosystem that is being forced to open up. The fact that you and I can book our travel tickets through third-party websites, we can look at our data through third-party websites, is an example of that. And I think that if any of you kind of have come from the banking industry or are building something for the banking industry, the focus has got to be on building that fantastic client experience, and to be able to serve the customer wherever they are in the context of their customer life story, right? So that might be for a retail customer, predicting my banking needs, because frankly, nobody wakes up thinking that they need a current account, or they need something. They worry about their children's education. They worry about being able to pay their bills. They worry about other things And so the financial institutions really need to, and fintechs do this absolutely fantastically, because they are using the data about the customer, they're using predictive analytics, bits of machine learning and artificial intelligence to work out exactly what those needs are. And I think that's the ultimate goal of using softer skills like design thinking to map out the customer experience, and then use data effectively to drive that relationship with the customer, not just the current relationship, but going forward as well. Now, we over the last 6 months, we worked on a project internally with our colleagues around the world, and we produced this report on what is happening around the world on open banking from China, Singapore to North America, for example. If any of you are interested in that report, I've included a link. You can download this report. This is about 100 pages long. But we've kind of taken we've spoken to our clients. In this report, you will see the technical architecture, the regulatory framework, and the requirements in each one of these geographies. For example, in India, we learned quite significantly about the India stack and how that is operating and working in facilitating open banking-like ecosystem, because open banking is not really a primary regulation. It's the UPI, the Unified Payments Interface, that is like open banking, but it's not called open banking, right? So in each one of these geographies, we've shared our perspectives and the reference technical architecture that is implemented by our clients. So I encourage you to kind of have a look at that if you can spare the time. As I said at the beginning, pretty much as soon as open banking or PSD2 was launched in Europe, everybody took a very clear stance. We just want to comply, or we want to compete. I would say 99% of the financial institutions were on the comply side of the equation, and now I think a majority, about 20% of those, are shifting to, now we've done the compliance bit, we've done the API, building up the API ecosystem. Why can't we use that to build compete products as well? And when we look at compete, and this is the kind of the meat of this presentation I want to talk to you about, which is, what do you do when you're competing? So you build things like account aggregation capabilities. You look at the likes of ING, HSBC, Lloyds, Barclays, pretty much a lot of the big financial institutions in the UK and across Europe have built the account aggregation capability, where I can look at my other bank accounts from within my one bank. Or I can use a third party, like there's tons of them. Like you can use a third party, a fintech application that uses open banking as a connector, and gives, as long as you give your permission, they will go and get your data from another bank and give you a whole raft of visualizations and start to do some value-added functions. For example, they will give you advice on value for, how do you learn about money? How do you teach younger children about managing money? And to the point where, historically, again, financial institutions have made a lot of money from overdraft charges. But if using very simple analytics, you can advise the customer that, look, we can see that there's a future dated payment that will come in next week, and you're likely to be in overdraft, but you've got money there that we can shift for you. So right now, I think we're in phase 1 of this adoption, where you can look at data, you can predict what's going to happen, and then you can take the action as a human. Then we're going to get to that stage very soon, I think in the next 12 months, where the system will predict what you would typically do based on the actions you have taken, and as long as you authorize the system, it'll do that action for you. So every time, for example, in that example I shared, where if you're going to be in overdraft, the system will automatically move the money and will give you a notification to say, hey, look, I've kind of worked out that you're not going to earn as much interest as you pay in your overdraft charges here. So I've moved I don't know, $500 from that account into this account to save you $50 in overdraft charges. To then so that I think account aggregation seems like a very simple task, but there's some real nuances around account categorization. And I think just like we have, there was a big drive many years ago to create this standardized size for your bank card. The fact that you have the same size card that you can take to any country, use ATMs anywhere, I think there's going to be a drive around standardizing the banking data. So the fact that a retailer can put any description in the description field I could go to the same supermarket different times of the day, and depending on which point of sale terminal I use, I get a different description. So I think that makes the categorization a little bit more challenging. But there are other things that I think people are working on, which is quite interesting. The next wave of projects that we have seen is embedding banking as a service. So I think the best example I've seen is BBVA embedding current account as a service with Uber in South America. So if I sign up as a driver, my SME bank account gets provisioned as a part of my sign up with Uber. So BBVA win because they are signing up 200,000 to 300,000 more customers, and on top of that, they are also helping those unbanked, underbanked individuals to build out credit scores so they can ultimately buy their own cars, get a home, etc. So we're beginning to see very early signs of those banks that are digital. So going back to the maturity, if any of you are from working at a bank, the maturity of your APIs is going to dictate how good you're going to be in that banking as a service model, and the security of your APIs as well, right? So those banking APIs, those banks that are purely focused on the comply side, are absolutely not able to play in the banking as a service function. So right now we're working on a project with a large client where they said, one of the e-commerce players in the country is their client, a corporate client, and they don't really want to be worried about payments. They want the bank to take care of the payment services. So as a bank, they're going to provide these B2B2C services, effectively powered by IBM, to build those capabilities so that you can, the ultimate company can get on with whatever it is they're doing, whether they are a gaming company or a betting company, or they are an e-commerce giant, or they are any of the other kind of retailer, for example. They can get on with what they're good at, and the bank can do what they're good at, which is in all of the KYC, sanctions checking, because we've seen a number of projects now where international payments are required. So then let's move on to some of the other topics around building a digital bank. Again, this applies primarily to large incumbent banks where it has been extremely hard to change the culture. To go back to one of my previous slides where I talked about ways of working, the bank has had to change the way they operate, put the customer at the heart of what they're doing, think about the customer journey, think about what value they're adding to their lives, and build something out. And there's some really good examples like RBS, Metal here in the UK, and a number of other banks have launched similar digital brands like ING with Yolt. So those institutions they've realized that they want to get that next generation of customer, but it's too hard to change the existing bank. They'll create a new bank, new organization, give them an absolute power to do whatever it is they need to do, and launch a digital bank. So then I think I want to talk about building a platform. Now, building a platform and building a marketplace are two different things, and often they get confused in the world of banking. A lot of our clients that have built out the platform, and it is also one of the super overused word in our industry. Everybody wants to build a platform, but the fact is, those that are more successful, they did not set out to building out a platform. DBS in your backyard set out to build. Solve real challenges around home buying experience. So those institutions that look at an individual, look at a specific segment, I have some clients here that's narrowly focused on certain professions like, for example, dentists, teachers, and doctors, because the needs of these individuals are very unique. And so you need people who understand that industry, that those individual personas, and try and solve their day-to-day life challenges. And those are the ones that build out those platforms. One of our other clients, Bank of Baroda, build out an agricultural platform where they've really created an ecosystem from seed to be able to sell crops at the best possible price. Because they spotted that problem of multi-generational business where people go back to the same old place they always bought, their grandparents bought the seeds from, and the same place in the market where they sold their crops to, but they might be losing out on best deals, right? So those institutions that very narrowly focus on what clients are they going to serve, what are their problems, and therefore you may have to hire someone that has worked in the industry, that understands that day in the life of a customer, and be able to do something. One of my other clients here in the UK, they specialize in manufacturing and drilling. So they hire people who have built drills, diamond-encrusted drills in the past, so that they can go and talk to those customers in their language and try and address that problem. And I think that so if any of your banks are looking to build a platform, don't build a strategy to build a platform. Build a strategy to solve a customer problem. And then Mega App, and I think particularly in Southeast Asia, we've seen a number of examples like State Bank of India, Yono is an excellent example of a Mega App where they have well over 100 business partners from the likes of Amazon in India to some of the smaller retailers in region. And they have attracted this really cool ecosystem and created a brand new revenue stream at the back of that as well. So the next few charts, I'm just conscious of time. I think I've got about 7 minutes left. I just wanted to you'll have a copy of these slides. I've actually talked through all of these examples without skipping through the slides, but you will see all of these examples where people have built account aggregation capabilities to building banking as a service. Barclays, another one of our clients, built identity as a service. Because ultimately, if you think about most of these financial services linked to identity, whether it's a corporate or an individual customer, the fact that I want to transfer, I don't know, £100 to Akhil has got to be linked with the identity so that I can confirm it is the same Akhil that I want to transfer services to. And I think the other related topic is the fact that the underpinning infrastructure for many geographies and countries is changing. Look at SEPA in Europe and faster payments in the UK and North America being built, and the Middle East being built at the moment. So there's okay. So there's those kind of utilities that sit in the middle and facilitate those transactions are being built, and so open banking actually, in my opinion, has two stories. One is very much about reducing reliance on the organizations that have historically processed payments like Visa, American Express, MasterCard, and using more of the national utilities. And the second aspect is delivering value to the end customer through the use of data, because financial institutions have tons of historical data over the last 50, 60 years that they have collected. Can that data be used to provide financial advice, nudges? Because there's a real issue of sustainability. In Europe, 66% of Europeans have no savings at all. So how can data and AI and all of this data be used to provide advice to the end customer? That's the other angle of the open banking story. So I think I talked about all of these use cases, and so I'm not going to spend too much time on this. So
Bharat, we've got 1 minute in the presentation before Q&A.
Yeah, so I think I took all of these examples. I'm not a big fan of using slides, but I took all of these examples before. And if I finish on this slide, maybe these are all of the kind of the use cases that we have seen around B2B to B2C to B2B2C, and the categorization of APIs. A good bank that is providing and running 30, 40, 80% of their business through digital channels will have in the region of 300 to 500 mature APIs. Internally, they'll have a couple of thousands of APIs that are being used to experiment, and we've just provided a categorization of APIs and the impact that they will have on the customer, on the business, and how complex some of these use cases may be as well. So I'll pause there, Akhil, and see if there are any questions. But your listeners will have copies of these slides.
Wonderful. Thank you so much. So one question to get us started, actually, on this slide itself. So categorization is something that's near and dear to my heart, partly because I'm an engineer and I like organizing things, but also because I've spent the last 12 months trying to do this with a bank, right? And we've been using the Beyond approach to create the categories. Is that what your categorization here is based upon, or how do you? Yeah, because I imagine that's the IBM kind of reference categories. I'm not sure. Maybe you can talk a bit about that.
Yeah, sure. So, we took the categorization based on the business-led use cases, but Bayan, we are one of the kind of the members of actively contributing members of Bayan, and we support Bayan in a lots of different ways. So when I look at the reference architecture for implementation, we have used Bayan to define some of these kind of services that financial institutions have used. So the categorization that you saw earlier was not based on Bayan, but was based purely on our experience of what other customers have done generally in terms of the APIs that they have built and the types of APIs they have built to support business growth. So we have seen lots of APIs being built around FX rates and customer onboarding, particularly through third parties as well. So short answer, Akhil, is that categorization you saw earlier was not based on Bayan. However, when we talk about the kind of real implementation architecture, and on this slide, in this bit here, we have implemented a number of, NetBank, for example, one of our other clients. There's an example. They built in South Africa. There's no open banking there, but they took a very aggressive stance on open banking, and they used Bayan as their framework to define some of these APIs and microservices.
Okay, wonderful. Thank you so much. And